trying to avoid being the pioneer and taking the arrows in your back is really important. You'd rather have something that is going to be accretive to the business versus take all your focus developing it for the vendor.
That's the type of product that I learned that is the most successful, I say user-friendly, because it's made by the users for the users without necessarily an intent to say, we got to sell it to 100,000 units by the end of the year like this.
Don't be afraid to hire people that are smarter than you are and then better at what they do than you are. Surround yourself with the best talent you possibly can. Again, it's a basic.
You have to look at professional sports teams because they're run better than the overwhelming majority of the businesses.
You know, the graybeards like me are retiring. The young people have been told for so long you have to have a college education or you're not going to be successful, you're going to be a failure. That's all changing, obviously, but it's going to take a generation or more to change that mindset and to
Lance, it's great to have you.
Yeah, thank you.
Welcome to Atlanta.
Thank you very much.
Besides being in town for the podcast, from a business perspective, what brings you in town today?
We have multiple assets under development right now, being constructed, and most are in lease up. One's about ready to open its doors. So I like to kick the tires and see the properties, but more than anything, really see our teams. And we have a decent presence here in town. So there's always something to do here.
Yeah. So I want to start with legacy a little bit and with your history, going back to where everything started for you, 1983. Am I right?
That's correct. Actually, it started before that.
Before that.
Yeah. So, we're a privately held family business. And so, my father started the business in 76, but I worked in multifamily in a couple different jobs every summer, basically, since I was 13 years old. So, it's kind of in my blood. But after school, after college, I came full-time thinking I'd go on to law school or graduate school. I never did, just stayed. So that was 43 years ago.
So you basically learn everything by doing, not by necessarily doing that, college education and completing with hands-on experience.
That's absolutely right.
I'm coming from a different culture, so the upward mobility is very limited, in the culture that I'm coming from. So I've been amazed how vivid, how present is the upward mobility in American culture. Like the person that starts at the very bottom, the most basic job could one day become the CEO of the company or own the company or run the company. So that's is part of the American dream.
I think there's a lot to be said for it. I think that when you come up from the beginning or the entry level, you own that information. You're not learning it in a book. You're living it. And I think that it guides you. It creates a unique perspective that others that don't have that maybe went to school for it.
Yeah, it's also something to be said as a matter of personal opinion. I believe in a practitioner. I don't believe in a professor as much. Not to say that there's no value in being a professor, but I think that the academia does not have a great relationship with reality. And at the speed of which the society is moving forward today, I think it's the academia has the hardest time that he ever had to keep in touch with reality, keep up with that. What are your thoughts on that?
I absolutely agree with you. There's the practical aspect of professions is lost many times by virtue of simply focusing on theory. And sometimes people come out of business school misguided. They're looking at things from the textbook versus actual application. So I agree. We see a lot of people that come to work for us or we interview that have very specific ideas about how things should run, only because that's what they were taught in school, but not actually done.
It's also very interesting because, and I go back to the cultural part here, in Europe, where I'm from, when you start interviewing someone for a job, they started to tell you their credentials, like, their diplomas, their degrees. And I just happened to interview a number of folks recently. And then, when we get to like, what's your level of English knowledge? And they're giving me like, I'm a C2 or whatever. They're giving me some letters and numbers. And my answer is always like, I don't know like what this means. I'm assuming there's, that has something to do with some, credentials. I really honestly don't want to know. Would you like to have a conversation? Would you like to talk in English? Just so let's find out, what the level is, not just something that's on a piece of paper. Because at the end of the day, that piece of paper is not going to do anything for you if you're not able to like put that in practice, if you're not able to have a conversation to like understand. And it's not just about speaking the language, but it's understanding the nuances too. So it goes a lot deeper than just that. So again, super fascinating for me coming from a different culture. And if I was to, choose, I will always choose this model here, because again, you don't need a formal education in order to be successful in just about anything. You could start. There are very few professions that I could think of that you really have to go to school, study, maybe the legal profession, maybe the medical professions. Outside of that, and there's a few others too, but outside of that, there's not a whole lot that you can really learn hands-on.
I think in the multifamily business, there are some specific degrees that would be helpful. Certainly, if you're in the C-suite or in the development world, getting an MBA in finance would be, I would say, checks the box for the number one thing I would do. I wished I'd done that. I probably could have progressed my career by 10 years easily had I done that.
Very interesting. In that particular context, do you think that schools, the universities, are currently equipped to train and to like provide a type of education to the students in a current environment that that information will still be relevant by the time they graduate?
Yeah, I think there's some fundamentals. Certainly, the universities have come light years in their offerings for our industry. Many more schools have a real estate specialty now, real estate school. And by virtue of that, there are some key aspects that I look for expertise-wise that didn't exist when I first came into the business. I look at University of Wisconsin has a tremendous real estate school, for instance. But to your point, I would welcome a graduate from there. In fact, we've hired ones from there, and just incredible analysts and a lot of basic good knowledge that kickstarts their career. Conversely, they have a very unique way of looking at valuation, unlike how we typically do. And so I would suggest that that's more theory-based than practical application. So I see both.
When it comes to technology degrees and the type of training that's needed and the knowledge that's needed to perform on a job, right, with everything that's happening out there in the world, AI and other technology, robotics, automation, do you see the current academic environment still being able to provide the type of education that at the time, someone that starts university today and graduates, let's say 4 years from now, for that information to still be relevant for 4 years from now?
I would say everybody needs a foundation. And if that education creates, there teaches them how to learn, it's critically important, but also the foundations of certain things. You're talking about information technology. You can start from the grassroots, but you may go further quicker if you had a foundation based upon an entry-level degree or a basic degree. But I don't think they're going to hit the ground running and be an expert because of how fast things are moving.
Yeah, things are actually moving a lot faster than I think we ever experienced in our life.
Absolutely.
At times I think that our mind can't even comprehend how fast things are moving. We're believing that, we're learning new things. We are actually learning, But by the time we learn something, there's something that kind of like surpasses what we already knew like a day or a week before.
Absolutely.
It's happening, right? Do you have that experience? Have you experienced that?
All the time.
Yeah.
All the time.
Yeah.
And I would say it's the last year and a half, it's accelerated tremendously. And I can see it in our business. And we've leaned in. We've also tripped, made a couple of mistakes, a couple of false starts, headed down that path. And I'm really speaking towards machine learning and AI. But I can see the value. I can see that to remain relevant and competitive, we've got to keep leaning in.
Would you like to elaborate a little bit? Because I think your experiences could be very helpful for others to like what was that you found working that worked really well for you. And then, those situations where things didn't work out the way you maybe projected to, or you were hoping to, and you had to like pull back or start over again or like change course.
It's some of it's basics that we all face, and that is you need a champion, you need a subject matter expert to manage a new initiative, any initiative. We all know that. But in particular, information technology, I'm going to call it fintech as well. You also need that dedicated focus. Somebody that's trying to do their day job and drive that is probably a formula for disaster. You're definitely going to be moving too slow. We've done that, and we have found we have to have more focus and more dedication to it. Costs more money, obviously, but it's bearing fruit. We bought a piece of technology that we felt was going to move us forward critically for asset management. And we did not have the right team to focus on it, to bring it forward. Plus, I think the vendor oversold it too. It really wasn't as ready as they indicated. We learned from that, made a change, and I'm intentionally not talking about the companies involved, although maybe over cocktails I'll tell you tonight. But anyways, we learned from it. I think we made a better decision the second time around, and we've dedicated the right individuals to drive this. And we're seeing huge strides already.
So first of all, the right team, hire the right people to oversee that. When it comes to the vetting process, what are some thoughts? What is a better vetting process when it comes to technology that you learn through this process?
I'm not doing the vetting myself. So I'm going to tell
you just high level.
From high level.
Yeah.
Obviously, talking to people that have applied the technology is critical. Some of your competitors that are willing to share. And this is one-on-one. We do this with all types of initiatives and we buy technology. But it applies even more here because it's moving so fast. Trying to avoid being the pioneer and taking the arrows in your back is really important. You'd rather have something that is going to be accretive to the business versus take all your focus developing it for the vendor.
There's a lot out there that I'm meeting with a lot of vendors. I'm being exposed to a lot of technology. People ask me for advice for like they want to do a demo and say, hey, what do you think about, is this going to work? Because, you've been an end user, you've been involved with operations. And I've been like very surprised to learn on more than a few occasions where founders came to me and they had a product that wasn't really like too developed. And I said, so how are you planning to sell it? So the answer was typically, well, we're going to find a ownership like an operator and we will like pilot this with them. And for them, like allowing us to pilot with us, we will sell the product to them at a great discount. So I said, you mean to tell me that you have a product that's not developed, you're asking your client to offer their people's time, invest in your product, making it better, and then as a favor, you're going to sell it to them at a big discount? And the answer was yes. I was quite shocked to learn that. But I'm learning that that's kind of like, it's pretty common practice, I think, with PropTech. What I also learned through many conversations and being exposed to this tech is that the best tech that I put my hands on is the one that's being created by the user for the user. In other words, there was a management company that had a need. This is the most common scenario. they had a need. They went to the market and they couldn't find a product to fit their needs. They found something that supposed to be the product to solve it. It didn't solve it. They went through several tries like that. And they finally said, you know what, we're going to build it ourselves.
Yeah.
And then they built it for their own internal use. And then they saw that they built something so great that other people could benefit from. And they went on the market and now they're selling it to other companies. That's the type of product that I learned that is the most successful, the most, I say, user-friendly, because it's made by the users for the users without necessarily an intent to say, we got to sell it with 100,000 units by the end of the year. Like this, they don't have that pressure. They invest, they perfect it. And once it's good enough for them, it's got to be good enough for others too.
I agree. That's the best stuff I've seen as well.
One thing that I've seen in processes in general on our property management side of things is that the way this technology is being acquired, typically the PropTech company has a founder that has an idea that things is gonna make things better in one area of real estate or property management. And they come with this idea, they hire developers, which, write a code and build that product. And then they hire salespeople to sell the product. But then in this picture, I'm not seeing anywhere the end user being part of it.
Yeah.
Whether as an employee that participates actively, testing that product and, telling them no, this is not how we do things. Or at least an advisor, at least somebody to be a part-time or fractional to test that product before they go to market and they tell property management, this is how you should use it. What they do instead, they're hiring the sales force that goes all the way to the top of the company, senior VP, CEO, COO, and they're doing a great presentation. But in reality, the person that they're selling to is not the end user.
Yes.
So they could look at it and say, hey, I think this is going to work out great, but does that translate into the end user experience? And I'm learning that a lot of times there's a significant gap.
Not as effectively. I agree. I had a call today. As a favor, I evaluated a piece of technology. It's really fascinating, by the way. One of the most interesting uses of AI in multi and other CRE. And so instead of us looking at surveillance, like currently stealth technology in which you have a human being watching a screen in a boiler room somewhere, this actually has AI. You can actually then search through the AI all of the recordings, but it will also alert you on certain prompts. So it's taken the human factor out of it, but it was being offered by a practitioner. So somebody who was deeply involved in the industry, it has partnered with the person who has developed the technology to perfect it for our use. So it was a good application of what you're talking about as a successful deployment of technology. I was impressed by it.
When it comes to AI, what are some initiatives that you're taking proactively at your company to integrate this new technology into the work flows and processes?
Our number one current application is really going to be in asset management, really improving the time it takes to produce good quality reporting. We see that as just a huge step forward for both our partners, our internal teams, our ability to manage the assets, abilities to evaluate and measure KPIs. So we're leaning into that hard. And that was our first stumble. That's where we started. I think we have now found an approach that's going to bear fruit and is bearing fruit. And it's also integrated into our property management platform. So it makes even more sense. It's going to take a lot of work on our part, but we believe it's going to be well worth it.
Do you use anything for underwriting, any AI?
No, we don't. Not yet. We do. Well, I say that. There's AI and there's machine learning. I mean, there's a true distinction there, but we are using some tools, but we are not using full AI for underwriting at this point.
Back to your journey. What was your first job in property management in multifamily?
Let's see. I maintained 5 apartment communities. I did the grounds in 5 apartment communities during a couple summers, and that was one of my summer jobs. And I was the grunt, mowing yards, and trimming bushes, and cleaning up trash, all fun stuff, trashing units, all those kind of things. When I went full time, I was assistant superintendent on a construction project.
What have you learned from those 2 jobs that up to today you could apply into your daily tasks or very regularly?
I learned that it doesn't matter what job you're doing, do it to the best of your ability, and good things will happen. And I've always taken pride in whatever I do. And you can take pride in mowing a yard just like you can in leading a company seminar. It reinforced that. I took away the fact that I liked it. I liked the property business. I really liked the construction side of the business when I got involved in that. We started our own construction company and grew it from nothing. I learned a lot of lessons through mistakes. But I loved the immediate gratification of seeing something be built and then, of course, housing people. That was the takeaway from my first construction job. But the entry-level stuff, grounds maintenance, a job well done, feeling good about it. Interaction with the other coworkers was great. And obviously, interacting with the residents.
When you're looking at candidates for various positions within your company, and we're not talking about here like the technical ability, let's talk about other areas of their personality, maybe emotional intelligence. What are the things that matter to you? If I was to be a candidate right now, an interview, let's just say for a regional maintenance manager, because I'm using that for example, because my background's been in maintenance. What are the things that you'll be looking at, hopefully getting from that ideal candidate, or for like someone to make a strong impression on you?
Well, the first thing is hopefully somebody on my team has vetted them and they're qualified. So let's assume they're qualified, which the resume doesn't always tell you. But let's assume they're qualified. Then I'm more interested about their personal culture. I'm interested in their values. I'm very interested in their ability to work with teams. I ask a lot of questions about that. I don't ask so many technical questions. There's a time, it's going to sound ridiculous, but an interview would take 3 hours with me. I don't take that time anymore. I've got other people that are good at it and are more efficient. But when I do talk to someone, I'll ask them, were you an athlete in both high school or college? I'm asking them because I really want to get in their head and understand how they've interacted with others in either a team environment or an individual effort. Questions like that. I want to know about their family. I want to know about their view on certain things. And it's really I have a discussion more than I do an interview now. If they don't have values that align with our senior leadership and our leadership teams, it's not going to be successful. I can't teach the values. They have to be there.
I learned from a great sales coach, international renowned sales coach. His name is Jack Daly. He says this: you have to look at professional sports teams because they run better than the overwhelming majority of the businesses, and kind of learn what they do well and translate that into. So it makes me make a parallel between what you just said. Have you ever been part of a sports team? Maybe not professional, right? Maybe college or something like that. I think that might have a lot to do with it.
Also, how do people react to adversity? Sports can tell you a little bit about that.
Meritocracy, could that be too?
Yeah.
Yeah. You can really make it. You can be on a team if you're not performing.
I agree.
And then you take that into the business. It's kind of like right there already. Yeah. They know what the expectation is. Someone does be.
And by the way, we hire people that have never been on teams.
Yeah,
it's not a precursor, but
yeah.
but it is an important discussion point.
Yeah, totally makes sense. You're about 400 employees now?
Yeah, we are.
400 employees. That's an incredible number. How big was your company when you first started working for a family business?
I think there was 8 of us.
Okay.
Yeah.
It's time gate entry systems were reimagined. Tired of dealing with clickers, key fobs, broken call boxes, and keypads everyone has the code to? Imagine managing multiple properties and realizing your keys are miles away. With Gatewise, access is in your pocket. No codes, no hassle. Residents can let in guests or deliveries from anywhere with a single tap. Gatewise integrates with your property management system, automatically revoking access when residents move out. The Gatewise Management Portal makes it easy to control every access point remotely from any device. No dedicated computer required, just smart, flexible control at your fingertips. Gatewise also supports self-storage, giving your team cloud-based control over tenant access. Fast, secure, and fully remote. More convenience for your residents, more time and cost savings for your team.
You've been through this entire journey, starting at the very bottom, working your way up to the head of the organization. Would you share with me some lessons that you learned, sometimes the hard way, in scaling an organization? Because, that's like, that's a big deal. And that's where I think, there are various phases I've seen of companies, like breaking at certain points. There's, when you get to like 50, you break, or like 100, or like 300. So I'm curious about your experiences.
Mm-hmm.
What were some great experiences? What, like maybe painful experiences, and what you learned from?
It's basics. At least it's basics to me. First off, don't be afraid to hire people that are smarter than you are and better at what they do than you are. Surround yourself with the best talent you possibly can. Again, it's a basic. It's surprising the number of people that don't want to hire people that may be smarter than them, may have more expertise in a certain area than them. I chuckle at that. We've been blessed with some incredible leaders in our business, and being able to create longevity with those leaders I would say, is one of the keys to our success. The tenure of our senior leadership team is incredible. At the senior level, again, we're a small business. 400 employees is incredible, but it's not massive. We've got over 300 years of experience in multifamily just at the senior level. That's golden. That's a treasure. So that's a huge success, and holding those teams together is important. That senior leadership teams then translate down that, both the success, monetary success, but even more so, translating culture and translating our values and our mission. And I think that's the other key component that has helped us grow. Is we had a sea change in our company. Oh gosh, it's probably been 25 years ago now. Well, I had a senior leader come to me who just went to business school while he worked for us. And he said, "Hey, I don't think our mission statement's relevant." As a co-owner of a business and co-leader of the business, you don't like hearing that. And I listened, and he said, "We've kind of lost our way." And again, it kind of shocked me, but we talked internally. I talked to Larry Sr., who's my father and founded the business. And I said, "I think this gentleman's correct." And his name's Scott. "I think Scott's correct." I said, we were a cult of personality. We knew every employee's children's names. We knew their spouses. We knew them by sight and name. We knew every asset. We would get to every asset multiple times a year. But we had 1,500 units, 2,000 units. We started to grow. And all of a sudden our culture became an amalgamation of the people that joined our team rather than us maintaining and teaching a culture and living a culture. We took the time from a grassroots effort over about a 6-month period, rebuilding our culture, answering the question of who did we want to be? And it came from we call them colleagues. We don't call them employees. Our colleagues developed this alongside the senior leaders. And we've lived by it. And I think it's been extremely helpful and helped our success through, it's not rigid, but just through that framework and those guiding principles, keeping us between the guardrails, helping us to make good decisions when hard decisions have to be made, trying to keep them aligned with our culture.
What size you're currently? How many units, how many apartment homes do you own?
Depending on what we're buying or selling, we're about 10,000 apartments.
10,000. Are you a owner manager only, or you're also third-party manager?
We used to have about 25% of the portfolio was third-party managed. Today, it's zero.
So you went away from the third-party model.
We did.
Would you like to share why?
Well, 2 reasons. Number one, we had some rapid growth, and we were more focused on our clients' properties than we were our own, and I didn't like that. I liked the commitment level by our teams, but I kind of felt second fiddle, like a stepchild, I guess, and I wanted to change that, as did Larry Sr. and the rest of our senior executives. And then secondly, we found ourselves with assignments that didn't really align with our overall business strategy. We made a conscious decision to leave affordable housing from the development side and move to conventional. And a lot of the assignments we were getting and being asked to do were affordable. And there's certain apparatus needed to manage affordable properties, and typically tax credit. It was a conscious decision. On top of rapid growth, we needed to focus on our own assets with our own investment partners first and foremost. And that's why we did it.
So you mentioned development. So you're developing also in-house.
We are vertically integrated. So we have a development company, we have a construction company, property management, and an investment company. And it's a great collaborative 4 companies. We work very well together. We only develop Class A currently, multifamily. However, we are embarking and really passionate about doing opening an attainable housing channel. And I'm using attainable because I'm not going to call it workforce. I'm not going to call it affordable. I think it's attainable. And I think it's the missing middle. And a lot of people are focused on it, have been for a long time. But I think I see a way forward for us, and I'm excited about it. I really am.
How many units you have in a development pipeline currently?
We have 4 under construction. 5th one will be starting within 60 days. So unit-wise, that's 1,000 units under construction. And that's typical for us at any given stage. We start doing more than that, kind of get over our skis sometimes. Less than that, we're not keeping our teams busy. So, it's been tough with starts this year. Been very difficult. Getting the capital stack figured out is not easy, as everybody knows. But that's a whole nother topic that we should talk about. But anyways, that's our pipeline. We plan on 3 more starts next year.
Sure. Would you like to elaborate on that some more, on capital stock?
Yeah. I think that I hate to ever use the word easy, okay? But compared to today, raising capital was easy at the peak of the cycle. Multifamily was the darling alongside industrial. A lot of people got into the business, we all know. Huge oversupply due to construction and development. everybody was making money. Well, as we all know, the last 3 years have not been a lot of fun. We've had leveling or declining rent growth in many cases, increasing income, but usually from renewals. But anyways, having said that, I think that what it's forced us to do is to become very, very creative on how we raise capital. And I'm really talking about the equity side, not debt. There's plenty of credit out there. So during this time, we just talked about technology, fintech has taken off. And so there's opportunities for the development community to attract capital we could never efficiently attract before. And it's not just a developer like me, it's BlackRock's doing it. KKR's doing it. They're reaching in to that individual investor now, giving them the opportunity to invest at the hedge fund level and other things. We've built our business on multiple channels of capital raising. High net worth, we've had investors with us for 40 plus years. We have a large group of those. You can call them friends and family, high net worth, family offices, and of course, private equity partners. We have not sought out the resident investment advisors, RIAs. That's all changing. The RIAs are now interested and want to provide alternative investments to their clients. It's now scalable. It's now possible because of technology. And we're seeing a huge amount of opportunity and incredible platforms that we're building and utilizing, as others are, that make it possible for the consumer to access the alternatives. And by virtue of that, it's going to unlock trillions of dollars.
Am I correct in, calling this kind of like a crowdfunding or something similar to that?
No, it's much more sophisticated. It is direct investing in multifamily as limited partners. As depends on your way you've set up your partnership, but let's call them non-managing members or limited partners. With the same rewards and risks we all take. Crowdfunding is a little different. It's very difficult to raise additional capital in a crowdfunding setup. This is a true partnership, and you're just accessing individuals who have not had access to alternatives before, and doing it through a fiduciary, which is even more important than an advisor. But that takes information technology, it takes regulation, so on and so forth. That's here now. It's perfected, and it's being deployed actively today. We're excited about it, and we're leaning into it.
When you're looking at new projects, new developments, what are the things that you're looking at when you're determining this is going to be what I want to develop new product? And then what are the things for others to look for, or maybe some red flags?
Again, it's fundamentals. We've always been very data driven, whether it be demographics or economics, but all our decisions on new development are data driven. So we have a system in house. You can call it an investment committee. That's what we call it, but it's a 3-level effort. It's idea. The idea gets presented, a site in a community that's already part of a set of communities that we've identified, MSAs and submarkets that we've already identified that we would like to investigate. They've checked all the boxes and hit all the data points we're looking for. Our guys will go out, they'll find an opportunity within one of those markets, they'll present it, get approved to move forward, and so on and so forth, until finally we get to a point where we're going to be ready to close the deal and start construction. So we're maintaining a disciplined process, but it all goes back to those data points, and it's blocking and tackling. Of late, we're all looking at pipeline, right? We're all looking at the absorption in any given submarket in MSA. That wasn't a data point 15 years ago. Sure as heck is now. So it's evolving and moving all the time because we're updating it all the time. But I think it's led to very good decision making, and we have 30 different data points that we look at, and it's a point system. We're certainly not the only ones that do this. Many of my peers do this, and then we weight them, and those weightings change based upon where we're at in the cycle. We even have one for political risk. I could certainly go down a rabbit hole on this topic, but that in essence is how we identify opportunity and then move it through our internal pipeline to make it a reality.
What are some top markets that you're looking at, some hot markets that you will either buy or develop something today?
I don't know if I'd call any market a hot market right now.
Okay. So I got to tone it down a little bit.
Yeah, I think
markets of interest, some interest.
We call it markets of interest. We're also somewhat disciplined about our footprint. While we see opportunities all throughout the United States, we try and stay somewhat in the same geographical regions, really to support our operations. And I'm really talking about property management. On the construction side, we parachute in, we'll parachute in and develop almost anywhere. However, having said that, we got into Huntsville, Alabama 15 years ago. People looked at me like I was crazy until you start to understand Huntsville, Alabama. That's where von Braun, the rocket scientist, said, this is where I want to work, because it reminded him of Bavaria. That was the birth of NASA. NASA, the number one per capita white collar or graduates in the United States outside the Beltway. Goes on and on. The research parks, Redstone Arsenal. We look for those kind of opportunities for growth, both job formation, income growth, pop growth. And Huntsville checked all the marks. Well, obviously, everybody's discovered Huntsville, and Huntsville is overbuilt right now. But the jobs keep coming. I think they just announced yesterday or a couple days ago that Cyber Command is coming to Huntsville now. Having said all that, there's others on the radar like that for us. And, I would love to have a tech hub focused effort. It's just not that simple. So that is one component we look at. I still like some of the traditional markets here in the Southeast. I think that the roller coaster in Atlanta is alive and well. This oversupply will pass. We can see it through analytics. We can see when we think it will happen. We don't know absorption with certainty, but we have a good feel. And if we're conservative, we can kind of see when we should be doing a new start in Atlanta. I like Atlanta long term. I like Charlotte long term. I don't like it today. But starting a project today, I like it 18 months from now. A lot. So we aren't looking at the doldrums today. We're looking at what it's going to be in 18 months or 2 years when we deliver.
So you're looking at 2 years out projections, and you just kind of like set your flag out there based on what's going to look like 2 years from now?
Well, all of us have access to information now. It's part of what's changed our industry. We all can, if we take the time, can look very specifically by submarket at the comp set on incoming starts, current construction, things that are in lease up, and get a real understanding of what we can anticipate. Somewhat, 2 years is tough, but certainly within the next 12 months. Not everything's going to start that says it's going to start. Not everything's going to be developed to say they're going to develop. So you've got to do some work on that. But if you're not looking out 2 years, you're probably doing yourself a disservice. I like Savannah. I can go on and on. There's a bunch of markets I like. We like Northwest Arkansas still. It continues to grow. I'd like to see higher rents there, but these are just a few. We're still bullish on Nashville. Nashville is very hard to get into. It's very expensive land, but huge opportunities in certain submarkets. So very traditional markets, but we're not afraid to go into a smaller market either. The tertiary markets have really been very good to us. We made a lot of money in the tertiary markets. So we look at a hub and then we look at markets outside those hubs. And a great example would be Asheville. I think Asheville is a tremendous market. It's not a big market. It's very difficult to develop in because of the topography. I'll wrap that part up by saying I think Knoxville is a tremendous market also.
Good. Noted. I want to talk a little bit about a big loss. What would you recall as being a loss that really hurt? Because I'm sure this is not all wins. There's a lot of losses when someone looks at a company like yours, tremendous success. Like there's a lot of losses and a lot of lessons along the way too. So what would be a loss that, still hurts when you think about it, looking back?
Oh, there's always a couple of big ones I think that we all have, from time to time or in your career. But, through loss or a mistake, you can also learn a lot.
It's, to me, the best way to learn.
Yeah. And so there's always something to be taken away. And you probably wouldn't be the same person if you hadn't experienced that adversity. So I'm going to talk about our foray into Western North Dakota. Back in 10 and 11, we had a partner come to us. Well, they weren't a partner at the time, but I was speaking at a national event, and two gentlemen came up to me afterwards and said, "Hey, can we buy you lunch?" And long story short, we ended up consulting for them, taught them multifamily business, and they became partners on certain projects. And a great family and great people. And they had been doing things in the Bakken, which is Western North Dakota, primarily two communities, Williston and Dickinson, during the shale play. And they were doing lodging and were just killing it. I mean, just unbelievable due to the need for housing. We studied it for 2 years intently, and we made the decision to do 2 projects there, a total of 578 units, 2 Class A projects in 2 very small communities. And we were convinced that we were naive and convinced that oil would never drop below $50. Well, as we all know, it got to $28 at one point. So about the time we started those, I think we started them in 13, multifamily industry took off across the country. We all know that. So we had all the subcontractors lined up, but nobody from that locale, because there were none. You had to bring them in from all over. So first thing we discovered is they weren't going to show up because they could work at home. Things took off. There were other opportunities. So I think that we turned over every subcontractor at least 3 times, framers 6 times. It went on and on. Cost us a great deal of money to build those 2 projects. We were the contractor, the general partner, the property manager, and we had a guaranteed maximum contract, which we always do in all of our construction. We take the risk. That was a large check that we wrote for the fun of building those 2 projects. Number 1, everybody found out what kind of partner we were. We did what we said we were going to do. When we delivered those 2, and we delivered them late, rents were $2.80. At the time, that was the same rents that they had in Manhattan, New York. 11 months later, rents were 80 cents. I think our 2 assets were the only 2 assets that didn't get owned by a lender at some point in those 2 markets. So we hung in there. We held them for almost 10 years and then exited. And our partners made a return, not a great return, but they made a return. And I'm both proud of that, but I still kick myself for making that decision to go out of to not stick to our knitting, to stay in our known markets and grow concentrically and going out there with a one-horse economy. That was the big mistake. So, that's probably my biggest one.
How about the biggest win?
Oh my. The biggest win, in my opinion, is always when your team wins. And we have a very, very great partner, private equity firm that we've done multiple projects with. We bought a large property in Indianapolis with them. In fact, I think it's the second largest in the state of Indiana. And this
How many units?
1,262.
That's a pretty big size.
99 buildings. It was small little city. I think 25 FTEs on the management team. And it was a heavy lift because it had been our first in-place rehab. That's not true. It was one of our early in-place rehab projects in which you go to work, you come home, you have a brand new bath, brand new kitchen. The industry's doing it now. Everybody's
Occupy
doing it.
rehabs, yeah.
And we even did washer dryer hookups and washer dryer closets, but it would take more than a day. And having said that, we did 880 of the units. Obviously, didn't do the others because I wanted to leave something for somebody to do after they bought it from us. That was the theory. We did really well. Very, very difficult asset. It was workforce, very challenging resident base, very difficult, a lot of team members. We had a couple great leaders at the regional level, and we actually domiciled a regional on that site because of the intensity of the management and the maintenance work. We executed our value add, held the asset for a few years, and decided it was time to sell. So we sold in April of 22. I would call that probably the sweet spot of the cycle. And we did extremely well. And I think our return was 42%. Our partners did extremely well too.
Excellent.
Only because our team did a great job.
What do you think the multifamily is going to look like 20 years from now?
I saw that question and I thought about it quite a bit, and I wish I had a great aha answer for you. But I'll tell you some things that come to mind. I think it's some obvious things. I think that technology is going to transform the living experience. I think the consumer is going to demand that we innovate and utilize technology to make their lifestyles better. Because it's here and it's going to continue to evolve.
100%.
So I think things like indoor air quality is going to take on a lot more importance because the consumer soon is going to be able to measure that in minutia. And they're going to demand better indoor air quality, both in aged assets and new assets. New obviously being much easier to solve that issue. The whole concept of the smart home is going to accelerate in multifamily over that time. I think it's just going to be a matter of competition and evolving technology that will make it achievable and affordable. And I believe the consumer is going to demand it, and let's hope be willing to pay for it because it's not going to be free. I think we'll see changes in building technology from a materials standpoint. I don't see the basics changing on how we build things. I'd like to say there's going to be innovation there. A lot of smart people have tried to make modular work. Some are making it work. There's reasons it works within certain miles of the plant, but I won't get into that too much. But I do think that evolving technology in material manufacturing will play a role in how we construct and the end result. Probably better barriers to moisture, more longevity of lifespan of certain materials. I think we're going to continue to have to pay attention to some of the environmental issues. I'm not going to say the word green. I'm just going to say focus on conservation of energy and lowering the cost of living for the consumer. So I think there's going to be pressure to do that, and we'll see those changes. Beyond that, I think that we'll understand every aspect of what's happening at a property in just a short period of time. When I say short period, within 10 years.
One of the things that I'm thinking about a lot for the past few years has been for me legacy. So I always like to kind of wrap up the conversation or get close to that point. And I want to ask you, when it's all said and done for you, and you're at a point where you're looking back, what would you think your legacy would be?
Well, obviously, my legacy is my family, but for the business, they're also kind of like my family. So my greatest legacy would be the people that hopefully learned some things from me and went on to do great things, whether it be in our company or others. To me, that's the greatest legacy I could leave is helping others grow and learn and prosper in our business. As far as our own individual company, we are still privately held, family owned, as I said. I have 3 of my children work for the company. I didn't recruit all of them. Others did. And I think there's an opportunity there to go to Gen 4. And I hope that that is successful and that happens. In our company, it's about hard work and earning your place. Nepotism is a very, very big focus of ours, and making sure that it's done right. But I hope the legacy is that the Swanks still own and manage that business, utilizing the same values and mission of a fashion that we have today. I think it would be a tremendous legacy for the business and for the people that live in our properties, because I know how they'll be treated.
I want to wrap up the conversation today and just say for context, we had 3 other CEOs that were sitting in that white chair right there. And I asked them the same question, given the advent of AI and everything that's changing so fast. One of the jobs that possibly will be still around doing by humans for the foreseeable future will be the maintenance technician job and maintenance related jobs. Some of them will argue that they are the millionaires of the future: plumbers, electricians, HVAC technicians, maintenance technicians. What are your thoughts on that?
I think you're seeing it in all the trades. I don't think it's just in multifamily maintenance, although I agree with you. One of my sons happens to be one of our floating maintenance managers, and it's a vital role. It's absolutely vital in our company. Our facilities and renovation efforts have expanded dramatically over the last 20 years. It's become more and more important every day. So to your point, we don't have enough technicians, whether they be entry-level maintenance techs, maintenance supervisors, or certified maintenance techs. There aren't enough. And everybody that's viewing this is facing the same thing. It's a national issue. It's no different, though, than the residential construction industry is going through. The graybeards like me are retiring. The young people have been told for so long, you have to have a college education or you're not going to be successful, you're going to be a failure. That's all changing, obviously, but it's going to take a generation or more to change that mindset and to expose people to the great opportunities that are out there, whether it be a certified tech or an HVAC tradesman, a plumber, an electrician. All those skills are golden. A robot's not going to do them, as you insinuated. So, to answer your question, I think that we have got to figure out how to bring others into that workforce and show them the opportunity that's there. And you and I had a brief conversation earlier, and you had some really interesting ideas that I want to know more about. But training, trade schools focused on maintenance is desperately needed in this industry. We are also seeing a huge change in salaries. Payrolls went exponential. It's going to keep happening until we fill these positions. And so to your point, I know plumbers, electricians, and HVAC techs that are making 6 figures routinely. That day is coming for maintenance. And it's actually here for some properties in our portfolio. I think we've got to recognize it and plan for it and support it in the best way we can.
Yes, it's been amazing having you on.
Thank you very much. I've really enjoyed the conversation.
Absolutely, me too.